Okay. Haven't done a video in a while, so I thought I'd come and do a video. Should do more of these. I'll be talking about trading options, and I just wanted to say, if anyone's got any basic questions, go ahead, ask me. I got my channel ain't that popular yet, as you can tell, so I wouldn't mind helping people starting off, and you can ask me really anything, any question at all. The dumber and simpler you think it might be the question, then you should be asking me. That's pretty good. So don't be afraid to ask the most basic of basic questions when it comes to trading, because I know when I was trading, trying to find out some of the just basic stuff is sometimes hard. You know, a lot of the stuff that you find, they're teaching you at higher levels already, where they assume you know some of the stuff already, and so I want to be there for anyone starting out that needs that help. One thing I can say though is that when you're trading, you can be tempted. You know, the stock goes up and down, and you can be tempted to trade all the time, right? Because you want money, right? So you can be tempted to trade all the time. What I'm finding, the best practice is patience. I find that is the best practice. And on my last video, I spoke about volatility. And I'm coming to realize that volatility blended in with patience I reckon is the winner. So what do I mean? Let's see. I mean, so you've got the stock graph, right? The stock graph goes like this. Now on your platform, so this will be price. On your platform, you should be able to bring up a volatility graph as well, which shows how volatile the stock is, because whoops, oh, that's terrible. How do I lock that so it doesn't do that? I think because I tapped the outside. All right, let's start again. But yeah, anyway, you'll have the price, which goes up and down, and you should be able to bring up a volatility graph, because the option price will be used calculating the volatility score, right? Volatility is like, how dangerous is this stock from being way out on the edges? How quickly is it moving? You know, because depending on the volatility, that will affect the option price. And if you remember in the last video, I was saying it's best to sell when volatility is high. So you want to sell options, because you'll get more money for them when you sell options over here. And you want to be buying options when the volatility is low, because when you buy them low, you'll be able to sell them high, and etc. right? And if you're selling high, you'll be able to buy back low. And the difference here from when you sell And then when you buy back, that difference of volatility will change the option price. And that'll be your gain. And so what I'm finding is, I was talking about patience. So I was finding patience is really applicable, is really good. Like, I'll just tap out and do this. So if we've got volatility going like this, and then like this, and then like that, and then it sort of sits there for a while, do you see? Maybe don't do anything here, because you don't know where it's going. Maybe do something here or here, because it's pretty high. It's above the normal. So maybe you sell options here, you see. Then you have a chance of gaining money as the price, as the volatility. Don't think of this as price. Think of this as volatility. Drops, you see. And maybe do something, like if this is the norm of volatility, maybe do something down here. Maybe buy some options down here, you see. So if you're patient and you wait for these momentous moments, that's when you go well, not all in, but that's when you put in more cash, more of your stuff. And so you might not need to trade every week, you know. If this is a weekly schedule, you might not trade there because volatility's nothing's happening. But volatility's up here, you might trade there, sell something, and go in with a good chunk, you see. So, and instead, because if you start trading every week and you're trading here where volatility is not really doing anything, it might go the wrong way for you. So if you've sold here and volatility goes up, you're not going to be getting rid of your options for a while, because you got volatility against you, and you might have price against you. And if you do, that makes it a big no. You're going to be hanging on for it. You might even have to do some rollovers in time. So there's my lesson. And the more I'm applying this, the more relaxed my trading is. And depending on what's going on in the world, you can sort of tell whether the graph's being heretic, that's not the word, all over the place basically, or whether it's acting stable or not. So I do a lot less trades, but I'm more relaxed with my trades, and I find the result comes quicker. And I can go in with a bit more if I see any peak scenarios or any extreme scenarios, and that's what you're looking for. And at the moment, I must say I'm pretty biased. I'm sticking with SPX. If you're not wanting to trade in that higher threshold, you might try SPY, which is 1/10 of the value of SPX. But I do that because these SPX has the best option prices, the best return on option values. I've tried trading some other stuff, like I've looked at Apple and Netflix and some other stuff, but I find that the getting in and out, getting in and getting out, and the value that you get for your option trade, especially if you're trading very low risk iron condors, and you're trading way out here on the price. Let's say the price is here, and you're trading way out on the edge. When you trade way out on the edge with these ones, the dollar value can be quite low. Whereas SPX and SPY, you can go quite out wide, out wide quite a bit, and your dollar value can still be not so bad, depending on volatility. Anyway, I hope that helps. Glad to help anyone with any basic stuff, so let me know, and thanks for watching.